They sank on her comments, but tick higher today. Welcome back to the second hour of the European Market Open. Then just getting ready for that European Market Open, for the open of cash equities trading in around 15 seconds time. And you can see that European equity market futures are pointing to the upside. US futures also pointing higher. We saw underperformance by US tech yesterday. That was down by 1.6% on the NASDAQ. Today we see an expectation of some outperformance there, up by 0.9% on NASDAQ futures. And that going hand in hand with what has been a fairly positive session, very in fact, through the Asian session, up by more than 1%. So European equity markets opening to the upside, up by around 2 or 0.3% on the London market. We've already heard at least one of the budget headlines. We'll hear more detail, no doubt, about the furlough, and there will be, I am sure, some further news that will move stocks in London around. But for the moment, the UK market is moving to the upside. So futures had shown that we were expecting to move higher, and indeed the FTSE 100 up by around 0.9% right now, as we hear from the Chancellor that he extends the furlough scheme out to June in its current form, and then it begins a sort of taper to the end of September. We have other markets in Europe opening to the upside as well. The IBEX up by 0.6%. The CAC 40 in Paris up by 0.5%. We've been hearing a lot from our colleague Maria today about the varied pace of reopening that is being tentatively attempted in some parts of Europe, but in other parts of Europe, actually moving in the other direction. We see the FTSE MIB, big story out of Italy yesterday from our colleagues around fiscal stimulus in Italy. That particular market up by 0.6% this morning. So European equity markets are opening to the upside. Meanwhile, the focus here in the UK is very much on the budget. The Chancellor is extending the furlough scheme, and it's going to be running until the end of September, as I mentioned, supporting millions of people until after pandemic restrictions are due to be lifted. It's a key part of Chancellor Rishi Sunak's budget, set to be delivered this afternoon. Joining us now is Vincent Juvens, JP Morgan Asset Management Global Market Strategist. Vincent, the UK budget, of course, looms large on my agenda because we're waiting to hear more about that later on today. I suppose it'll be well received by many that we've seen an extension of the furlough scheme, and without a cliff edge, a sort of tapered end to it.
Yeah, clearly this is widely expected. We are looking to an extension of the current policy mix in the UK, and we do not expect major change. It's not the right time to change anything, by the way. The policy bridge is pretty much needed at the moment, both on the monetary side as on the fiscal side. We may see some light at the end of the tunnel, especially in the UK at the moment, on the back of the successful vaccination campaign. There are still many difficult months ahead, and as the economy reopens, the government need to really support those businesses and those people which have been the most affected by the crisis, to allow them to benefit and to reap the benefit of the economic recovery which we could continue to expect for the second part of the year. And by the way, the UK is doing what other countries are doing at the moment. You see that in the US we are discussing obviously a new stimulus plan as well, and the stimulus is ongoing in Europe as well. So last year government spent a lot to cushion the impact of the COVID crisis. No, they still need to spend a lot to support the economy in its recovery phase, and also more and more to ensure the sustainability of our economy with more green investment and the likes, which we see in the US, Europe, and the UK has been very good at it as well.
Yeah, certainly. I'm sure we'll hear a bit more about the green agenda later. The first green gilt due to be launched in the next fiscal year here in the UK ahead of the UN Climate Summit. In thinking about the tax environment, the fiscal environment, and there is a fear, and there do seem to be many voices saying that we should not see premature fiscal tightening. Certainly many economists we talk to and asset managers saying that is not what is needed. International bodies like the IMF also saying we don't want to see premature fiscal tightening. What kind of time horizon do you look at then, Vincent, when you're thinking about the UK for a moment, when you look at when tax rises might be appropriate? When can we start to put that into the conversation?
Hard to say when they would be appropriate, and for an economist they may never be really appropriate, but at least it's not for this year. That's something for 2022 at the earliest, in my opinion. We really are in the early phase of the recovery in the UK, in Europe, so it's not the right time to really slow this recovery with any tax hike. We can afford us to continue to invest in this recovery. We haven't discussed the monetary policy side of the equation, but this is expected expected to remain very accommodative. So government have an incentive at the moment to continue to support their economy. Their growth rate is actually higher than their financing costs. So it's really the time to continue to invest in the economy. So I wouldn't consider this tax hike, corporate tax hike, too soon. Although I recognize that it's probably one of the most obvious source of financing to reduce the budget going forward. But also in a post-Brexit world, the UK also will need to think twice about what its ambition is about the corporate tax rate, obviously. But that's, again, more 2022 and beyond, hopefully not for this year.
Right, yeah, maybe a little premature for the conversation, but it is interesting to think about how much lower the tax rate is in the UK. But as you point out, there's the Brexit dialogue to consider as well, and where that leaves the UK as in attractiveness. Let me ask you about interest rates and gilts in particular. Gilt yields have been moving higher and actually back to pre-pandemic levels. Of course, there's the global dynamic here. There's what's happening with Treasury yields. The recovery in the US economy is clearly crucial. How should gilt yields or gilt investors be watching the budget later on? We'll no doubt hear about infrastructure investment, around green investment. What will stand out to you, do you think?
Well, the move in the gilts have been particularly strong. Definitely, if we compare it with what we've seen in Europe, where the move has been a bit less important, the move in the gilts is very similar to what we've seen in the US. Obviously, there's some contagion for what we have seen in the US. There's some enthusiasm, obviously, behind this gilt move because the prospect for the economy are improving. Also, on the back of what I've just said, a very successful vaccination campaign fueled the hope that the UK economy may benefit a lot from it, which is reflected obviously in the gilt as well. This said, I would expect the BOE to stay vigilant, pretty much like other central banks globally, because there's still a lot to do from a fiscal perspective. You mentioned green investment, infrastructure, and so on. Really, the BOE, like other central bank, is there to facilitate the work of government and of the fiscal authorities to really deploy this policy bridge further in the time, which is an absolute necessity. And definitely ahead of the COP26 in Glasgow, the UK will need also to show that it's also taking measure at home to really put the UK on a sustainable growth path. And so more investment mean that you will need to have a lower rate for longer, maybe slightly higher than the pre-COVID level, but not much higher. So clearly, probably that getting real positive rate, it's a zone where the BOE will probably intervene a bit more, like other central banks. So at the moment, it's more the level we are looking at the moment.
Vincent, thank you. Stay with us. Vincent Uvens, JP Morgan Asset Management Global Market Strategist. Stay with us on the programme. Coming up here on the European Market Open, the Federal Reserve Governor Lael Brainard says recent bond market moves have caught her eye. We'll bring you the details and talk about the yield story next. This is Bloomberg.
I would suspect there's a pretty good chance you're going to see rates going up, and people starting to worry about that at one point.
Some of those moves last week and the speed of the moves caught my eye.
I think we obviously have control of the yield curve at the short end, and at the longer end, I think when it moves, it depends a lot on the driver.
We are seeing a multi-year stimulus unfolding in the US. There's a justified rise in real yields that central banks shouldn't be trying to fight.
If the driver is, as it seems to be, news about vaccines or news about health of the economy or news about fiscal stimulus, then I think it's a natural reaction.
I would be concerned if I saw disorderly conditions or persistent tightening in financial conditions.
The reason yields rise matter. The level, the speed, and the reason are all very important in determining the way that equities and different factors in the market behave.
I've been very clear. I would not buy 10-year treasuries, just so you know.
A number of newsmakers commenting there on the rise in bond yields on Bloomberg TV. Meanwhile, Federal Reserve Governor Lael Brainard said recent moves in the bond market have caught her eye. In fact, you heard her saying that in those clips there. She added that the economy remains far from the Fed's goals, though, for inflation and jobs. Vincent Youvens, JP Morgan Asset Management Global Market Strategist, is still with us. And Vincent, I should point out Jamie Dimon was in those clips of people talking about what's going on US Treasuries. So just to flag that to you. We also heard there, I think it was Goldman Sachs making the point that the level, the speed are all very important when it comes to moves in bond markets. And it was the speed of the moves that seemed to catch the eye of Lael Brainard. Do you think she was trying to communicate anything new from the Fed when she made those remarks?
No, I guess for me, the important communication for the Fed is definitely the vigilance towards the level of real interest rates. So we know that we have a backstop at the Fed level. That's very important. So I believe indeed, and I'm not going to contradict Jamie, indeed, that there are good reason to see interest rates creep up higher in the US. Really, we have an economy which is turbocharged with a lot of stimulus at the moment. We have rates are rising for good reason. So, and indeed, the level, the speed are all important. We are not, let's say, at the level we've witnessed during the reference now, which is the taper tantrum back in 2013. But still, we start from a very low level, so the pain is probably a bit more acute today. So for us, clearly, there's no interest at the moment to be very long US Treasuries at the moment, like Jamie Dimon said. Either yields stay low where they are and you have no income, either they rise and you lose, obviously, from a price return perspective. So clearly, duration is something we need to manage very prudently in our portfolio. At the same time, I would say if you look for hedges for deflation and so on, equity still stands out. 2013 at the end proved to be a very good year for equity market, as was 2014. So clearly, the cursor is positioned towards equity as far as we are concerned at JP Morgan Asset Management. Again, the pain threshold for the Fed will probably when you see US real yields start to get in positive territory. I guess from that point onwards, I would expect probably investor to get back on the US Treasury market, because there you would have, again, some yield cushion in this market, and the Fed to already start to intervene. Because the US may have good economic performance in the fourth quarter and so on, but it still needs low rates to finance this massive fiscal impulse that Joe Biden wants to deploy over the coming years.
Yes, it's interesting. How do you keep rates low enough to finance that fiscal burden when an economy is recovering at the speed that the US economy is recovering at then, Vincent? That seems to be a good question, because we heard from Joe Biden, the president, of course, that vaccinations might run ahead of schedule, the end of May for a first vaccine for every adult in the United States, things really gaining momentum stateside. I wonder how quickly you are expecting now the US economy to recover.
I guess by the end of the year, the US will have recovered its 2019 level. That's pretty clear. So really looking at the fourth quarter economic data, the economic momentum as we enter 2021, it is really improving and improving fast. And if we indeed have the additional stimulus kicking in, and the vast majority of this stimulus will already have a real short-term impact on the US economy through additional check to household, to poorly with revised unemployment benefit and so on. So it will hit the ground quite fast and really support the economy quite fast. So for the US, I'm not too concerned. Obviously, I would like to maybe bring back, let's say, the attention to Europe, where obviously I've heard the mention of we need to be vigilant about financial condition. The story in Europe is probably different from the US. The economic momentum is better than expected, but is weaker than in the US. We have probably in many countries a higher debt burden, more structural deficit in place. So, and financial conditions are already tightening. We had the Eurozone Bank Lending Survey in January. 25% of banks reported that they were tightening their financial condition for corporate. And we know in Europe, banks are the main source of financing for corporate. So in Europe, more than elsewhere, we need to be even more vigilant about the path of interest rate, and the ECB needs to be more active in this respect. We cannot allow too much contagion coming from the US in our fixed income market, in our interest rate environment.
That's very interesting, not to allow too much contagion, something I'm sure the ECB is watching. They've told us they're watching very carefully. Vincent, thank you. Vincent Juvens, JP Morgan Asset Management Global Market Strategist. Vincent will be continuing his conversation with us on Bloomberg Radio at 9 a.m. UK time. And Vincent rightly brought the conversation back to Europe there and what the rising yield environment means for Europe. And no better illustration than the services sector in Spain when it comes to examples of sectors under pressure, heavily reliant on tourism, of course, as it is. February services PMI rising to 43.1. That is just a very tiny fraction above the estimate or the forecast of 43, but still, of course, in contraction territory. That was what the number below 50 obviously means. The composite PMI 45.1. Let's get a Bloomberg Business Flash. Here's Laura Wright.
Thanks, Anna. Greensill Capital is nearing a deal to sell its operating business to Athene, an annuity seller part-owned by Apollo Global Management. It comes amid a crisis of confidence in Lex Greensill's startup, losing long-time allies like GAM and Credit Suisse. Questions are emerging over the creditworthiness of Greensill's borrowers. A decline in coronavirus cases may be giving ride-hailing firm Lyft a reprieve. It says the last week of February was its best in terms of the number of rides since the start of the pandemic, and it expects the increases to continue throughout March. The firm is forecasting it will lose about $135 million this quarter, but says the worst is in the rearview mirror. The exits are stacking up at Goldman Sachs. Sources say its chief lawyer, Karen Seymour, is leaving. It's the second departure from Goldman's top decision-making group in as many days after the exit of its co-head of asset management. The Wall Street Bank is also dealing with the departure of its consumer banking chief. That's your Bloomberg Business Flash. Anna.
Thanks very much. Laura Wright here in London. Coming up on the programme, European leaders struggle to find a way out of the pandemic amid rising cases, variant concerns and prolonged lockdowns. We'll bring the latest a sum up of what's going on in the Eurozone from Brussels next. This is Bloomberg.
asleep. So stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Welcome back to the European Market Open. Wednesday morning, 21 minutes into our European trading session, and some decent gains coming across these European equity markets. You can see the FTSE 100 up by more than 1% this morning as we wait for the budget to be announced a little bit later on today here in the UK. Let's turn our attention to what is happening further afield across Europe, though. Italy has expanded restrictions to limit the spread of coronavirus as the country faces a surge in cases, especially from the UK variant. Our reporter in Brussels, Maria Tadeo, has been taking a look across the continent at all of the measures being introduced and where they're being dialed back. So, Maria, Europe is struggling to contain the virus. What measures has Mario Draghi's government in Italy then? What has the new administration announced?
Yes, and Anna, there was a lot of expectations built into Mario Draghi. If you're remembering his first big speech in front of the Senate, he said dealing with coronavirus was his #1 priority, and every effort in the country was going and headed into trying to tame the pandemic. Now, when you look at the decree, not a lot of changes, I would say. You know, the curfew stays on for another 4 weeks. That recommendation to not travel between Italian regions, and a lot of this, of course, going into the Easter break, that stays on also for another 4 weeks. And the government also saying that activities that have to deal with people like restaurants, bars, they stay open in the slot that they have for the time being, but nothing changes on that front. So we're not really seeing major easing. If anything, it's just a continuation of the measures that we've seen for another month. And this is coming, of course, just a few days after Draghi decided to replace the head of the Corona unit, Arcuri, from his duties, and has now been replaced by an army general, which gives you an idea that the country is looking to scale up quickly and actually bringing some of the army logistics perhaps into facilitating the vaccine. Italy has been one of the fastest countries in Europe when it comes to distributing the vaccines, but if you look at the overall numbers, this is still a very, very slow rollout.
Yeah, really interesting. The army has certainly been involved in the UK vaccine rollout, certainly in certain stages. Meanwhile, in Germany, let's go there, potentially going in the opposite direction then from Italy, with Angela Merkel under pressure to reopen. So she's reluctant, but some state leaders putting pressure on her. What's the latest?
Yes, Anna, this is a debate that's going to happen today between Angela Merkel and the different states in Germany. As you said, there's a lot of pressure on Angela Merkel to reopen, and if she's not able to reopen, at least put in place a roadmap to show how that would work in the next few weeks. Now, she has said the #1 metric that she likes to look at is the infection rate. That continues to be high. The expectation is that coming out of the meeting, not a lot will change overnight. If anything, it's just a question of maybe Germans being able to bring in more people into their homes, and this is more private events. Everything that's public gatherings, restaurants, gyms are likely going to stay shut for another 4 weeks. But the focus here will be on that roadmap, on pegging the reopening to the testing and also the infection rate. Their problem here is that it's not an ideal world, because in an ideal world, you would peg that to the vaccination rate. But it does show that Europe is behind that. So it's still very much the rate of infection on a daily basis that's dictating the agenda across governments.
Maria, thanks very much. Our reporter in Brussels, Maria Tadeo, with the latest on the limitations on daily life, the lockdown measures, and indeed the vaccine rollout. Thank you very much for that. We are going to be talking shortly about the rollout of green bonds, which is interesting in the light of a red headline that just crossed the Bloomberg moments ago. Italy is opening its books on its inaugural sovereign green bond. So this is the first one from Italy. We're going to see the first one from the UK a little bit later on in this fiscal year, or into the next fiscal year. This follows on the heels of Spain and of Germany, so we'll have further analysis in the next half hour of the programme on that very theme. Let's get back to the markets, though, and what we're seeing in equity markets this morning. Here with some of the stocks on the move is Danny Berger.
And we got some of the first looks into Stellantis. That's the combined PSA Fiat merged company. And it is good news. So we are seeing the stock rally more than 2.5% today. And it's all about their profitability. Margins forecasted to be better than expected, more than 7.5% at the high end. Previously, for the past year, their margins were more around the 5% figure. So that's definitely an improvement in that first glimpse we're getting. Now, looking at some of the mid-cap space in the UK, one of the biggest movers there is Micro Focus. It's a software company in the UK, as the name would suggest, but a big news coming from them, a partnership with Amazon Web Services. They're essentially going to help companies that are moving into the cloud. Amazon's going to use some of their services to do so, which of course is a big shift that we're seeing during the pandemic. Finally, though, one of the big movers to the downside is Hiscox, the insurer, the biggest downside mover in the stock 600 today, posting a negative profit. And they're also taking away their dividend, but want to reinstate it as soon as they can. But that's certainly hitting the stock at the moment, Anna.
Thanks very much. Danny Berger there with the latest on your movers. Some substantial moves here in the London market. So coming up on the programme, we continue the conversation on what business wants from the budget. We'll be speaking to the CEO of the British Retail Consortium next. No doubt Helen Dickinson will be welcoming of the news we've had on furlough overnight. But what more does she want to see from Rishi Sunak, the Chancellor? He will, of course, take to the dispatch box a little bit later on to deliver his budget. This is Bloomberg.
What's the biggest mistake you made when you were a fresh MBA grad and looking for a job?
Make sure you try to do something that you're interested in and that you think you'll be good at. I just was on a path to law school, and I actually never asked myself why I wanted to go to law school. And I randomly went to an investment banking analyst recruiting event, and I figured out I had an aptitude for it. I was interested in the work. If you're not interested in it, and it's not something you're good at, the money will not justify it. I also think that there's nothing wrong with experimenting. Doing something that you always thought you might want to do, or trying it for a couple of years, you can then go back down a traditional path if that's what you want to do. Try to remember what you want out of a job, where you want to live, what you want to get from it, from personal experiences, from development, from training, from fulfillment, from engagement in the community, and make sure you think about those things up front as you're recruiting and not try to evaluate it after you got there.
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Welcome back to the European Market Open. 30 minutes into what is turning out to be a very positive session for European equity markets. We have European markets moving to the upside. The Stock 600 up by 0.7%. Some really stellar gains coming through in London, up by just over 1%. The Xetra DAX up by 0.9%. And I'm told by my colleagues the DAX is actually hitting an all-time high intraday. So we'll wait to see if those kind of gains are maintained to the close. The IBEX, the FTSE MIB, the CAC, all very strongly up in positive territory. So lots going on this morning in terms of moves to the upside and recovery from yesterday's concerns, I suppose, around bubbles in various parts of the market. In terms of the sector breakdown, then, we've got nearly all sectors in positive territory. In fact, there's only one that is negative, and that is utilities. Elsewhere, autos and parts moving higher. No doubt that will be a strong move for the German market. Autos and parts up by 2.5% in today's session. A quick word on one business we need to keep an eye on here in London. That is Prudential, the insurance business. The full-year adjusted operating profit coming in at 5.51 billion. That is above the estimate of 5.25. You can see that that stock is up by 0.5%. No, 0.3%, sorry, in this morning's session. They are talking about, or mulling, raising equity to institutions and Hong Kong retail, which is an interesting line to come through from the business today. They're also talking about their demerger of the Jackson Bank Finance unit. Heading into this, there's a lot of focus on dividends, and so we're looking for lines on dividends and whether there'll be any movement on that. There we go, second interim ordinary dividend of 10.73 cents per share. More on that as we watch the story develop. Let's get a Bloomberg First Word News update. Here's Laura Wright.
Thanks, Anna. President Joe Biden is calling for states to give all teachers and childcare workers at least one vaccine dose by the end of the month as part of a fresh drive to reopen schools and get the economy back on track. The president says there will be enough doses for all American adults by the end of May. OPEC Plus is set to agree a production increase this week as it seeks to cool a rapid rally in oil prices. Bloomberg sources say there's a widespread view within the group that the market can absorb additional barrels. Saudi Arabia remains cautious. Russia is keen to open the taps, but we're told all sides are ready to increase production. Senator Elizabeth Warren is proposing a 2% tax on wealth in excess of $50 million. To achieve that, she wants to nearly double the budget of the Internal Revenue Service, or IRS. She says that will help with enforcement and mean the richest Americans get audited about once every 3 years.
More and more people are starting to look at the wealth tax and say, wait a minute, this makes a lot of sense. You know, people across this nation get it. Independents, Republicans, Democrats, a majority of all of them want to see us do a wealth tax because they know that the system is rigged against them.
Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna.
Thanks very much, Laura Wright, with your First Word News updates. Let's get back to the UK budget story. Rishi Sunak will today pledge to use the UK government's fiscal firepower to protect jobs and livelihoods. In his annual budget statements, he will also signal the need for future sacrifices to pay down the huge debts accumulated over the past year. Let's get some analysis. What do we need to look out for? Bloomberg's Lizzie Burden is here with expectations. Lizzie.
Well, Anna, the biggest challenge facing the Chancellor Rishi Sunak is this prospect of a jobless recovery, the idea that GDP could bounce back, but a high level of unemployment could linger. The Resolution Foundation says it's the lowest paid workers who are most likely to lose their jobs in the next 3 months. So that's exactly why we're expecting the Chancellor to focus support on immediate support for jobs and incomes, such as by extending the furlough scheme, as we heard last night. But all of that's going to cost. And the next headache for Rishi Sunak is going to be the public finances. This chart shows since the last budget, we've had 13 major fiscal announcements that have pushed government borrowing up to a peacetime high. The question is whether Rishi Sunak deals with that now or whether he signals that he's going to deal with it later. We're expecting a gradual rise in corporation tax by the next election. But crucially, he is not going to want to abort the recovery. This chart shows Bloomberg Economics forecasts for GDP over the next 5 years. And every economist I've spoken to has said that a premature fiscal tightening is going to hold back this bounce back in GDP. Remember, the Governor of the Bank of England, Andrew Bailey, said people are going to go for it when restrictions are lifted. But the question is, if tax rises are on the horizon, will people who've been lucky enough to save get out there and spend those savings? That's a question for the Office for Budget Responsibility, the UK's fiscal watchdog, in its forecasts that come out alongside the budget today. And also, will the success of the UK's vaccine rollout lift its expectations for the recovery? All of that later today. Anna?
Lizzie, thanks very much. Lizzie Burden with a preview of what we can expect from Rishi Sunak, the Chancellor. Now, Helen Dickinson, British Retail Consortium CEO, joins us with her expectations, her hopes for the budget. Helen, very good to speak to you. Let's start with your response to the overnight developments. We've heard about the furlough scheme already. We've heard that it's going to be extended out to June at 80% and then with a kind of taper until the end of September. What's your initial response?
I mean, that's great news. I mean, there's no doubt that the furlough scheme over the course of the last 12 months has been a lifeline for so many retail businesses and other businesses impacted by the pandemic. It's saved not just hundreds, but not just thousands, hundreds of thousands of jobs over the course of that time. So the fact that it is being extended is really good news and will mean a lot of people breathe a sigh of relief. Certainly from a retail point of view, for the latest data, there were 600,000 people across the 3 million or so in total that work in retail that were still on furlough in January, because obviously we've got the closure of so-called non-essential shops at the moment, and that's a big number of people whose jobs we want to be able to secure.
So clearly this has been very important for the sector that you represent, that you talk to, Helen, the furlough scheme. What else, though, are you looking for? We heard earlier about the importance of business rates reform from the CBI. I'm guessing you've got thoughts on that, but what else are you wanting to see from the Chancellor?
Well, the business rates reform and extension of the business rates relief is probably, definitely top of the list. So it was one of the first things that the Chancellor did last year. He stepped in, he put in place a holiday for all of those businesses that operate in high streets and town centres up and down the country. It meant that they still owed their rent to their landlords, but the tax on that rent was suspended. So we need that to continue into this year, because it runs out, that relief runs out at April. So enabling this a sort of bridge back to whatever the new normal is, because certainly every retailer that I talk to really wants to be, for those that are closed, open again, trading, to be able to trade their way to recovery. But we've got to get that bridge from where we are now to then. And so business rates relief, furlough, and also the new grants that were announced over the course of the weekend, the extra £5 billion, that's good news too. But as we understand it, there's a cap on those grants for some of the medium-sized and even larger businesses that do employ lots of people. So that cap is all to do with state aid and the leaving of the EU. So we think that the UK government now has the power to be able to remove that cap, because that would enable more businesses to get access to those grants, and that would be very helpful in protecting those jobs as well, I think.
Are you looking for some sort of online sales tax? Is that something, Helen, that you think is likely? Similar things, but not the same, have been talked about already in the UK. What are you expecting to see on that front?
We're not expecting to see an announcement on that. I think certainly for many retail businesses and for us all as consumers, online has been a real lifeline for us over the course of the last 12 months. Many businesses who have shops also have really invested in their online offer. And I think the key thing for the Chancellor from a retail point of view is that this is an industry that is around 5% of the economy, but pays 10% of business tax. So certainly what we don't want to see is anything that would increase the tax burden on that industry, or that would stand in the way of that consumer-led recovery that everybody is really hopeful that we will see, and hopefully the Chancellor will, put in place some stimulus to encourage consumers to get back out there once the economy is back open again.
Helen, does the retail sector want to see use of documentation or passports or some sort of proof of vaccination being used in the retail space? We talk about this as if we call it a vaccine passport, and we think of it as something that might enable travel to certain places. But I wonder how much appetite there is within the sector to try and implement something more domestically, and how much that has been talked about.
It's been talked about a little bit. It probably isn't top of the list at the moment, because I think it is something that needs a national and potentially international solution that works for everyone. I sort of agree with the way that you've even posed the question there. I think that calling them passports sort of conjures up all sorts of ideas for lots of people. So really part of the totality of our new normal, I think, does need to include a real close look at what some sort of certification for vaccines may look like, and whether that is or isn't appropriate. Testing, more regular testing, ongoing use of the test and trace system. So certainly on testing, that has been a subject of big discussion, because there's much more regular testing now available in local authorities, what are called lateral flow tests, which are the ones where you get the results within 30 minutes rather than having to wait 24 hours for it to go to a laboratory. And if we can have more of that testing available in local places, that means that if there are any outbreaks of the virus in certain places, then the test and trace system can kick in, and that can be clamped down on really quickly, so that because everybody is so focused on and wanting and making sure that we don't end up in another lockdown, because for so many businesses that would really be the end of the line.
Helen, thanks so much for joining us. Helen Dickinson, the British Retail Consortium's CEO. Thanks very much to Helen for joining us as we build our way towards the UK budget. And speaking of which, we've got live pictures coming to us this morning from Downing Street. We wait for the appearance a little bit later on this morning of Rishi Sunak, the Chancellor. He will, of course, be waving his red briefcase around, we understand, in Downing Street, perhaps in a slightly more socially distanced manner than usual, but that is the usual run of things. So we'll wait for him to make his appearance a little bit later somewhere on Downing Street. We're also getting some breaking news around Greensill. This, a much-watched story here on the Bloomberg terminal. The German regulator is close to freezing payments at Greensill Bank. This is an ongoing conversation with regards to Greensill Capital, which we understand is moving closer to a deal to sell its operating business to Athene Holdings. So this clampdown by the German regulator looks close to coming, as the business is very much in a state of flux, a crisis of confidence, it would seem, in Lex Greensill's startup lender. This follows negative headlines surrounding this business involving GAM and also Credit Suisse over recent days. So one we will keep an eye on. Coming up on the programme, green or greenwashing as sustainability-linked bonds explode in popularity. We discuss a lack of transparency and data surrounding these products. That's next. This is Bloomberg.
90% of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds on the global economic recovery. What kind of leader are you?
I'm a leader that works on figuring out destinations that we should aim for, and then chooses the direction.
Friday is Jobs Day on Bloomberg Television. The first full jobs report under the Biden administration. What will it mean for the new stimulus package? The February Jobs Report, Friday morning at 8:30 on Bloomberg Surveillance.
Welcome back to the European Market Open. 46 or so minutes into a European trading session that looks very positive. The FTSE 100 up by 1.1%. Autos and parts also doing well in the German market. Let me talk to you about what's going on in Italy. We've got the Italian services PMI number just breaking. The February services PMI rising to 48.8. That is still in contraction, still below 50, but it's above the forecast. The forecast was 45.7. So we are seeing these numbers coming in below 50, as you would expect. We had the Spanish number earlier on this hour, now the Italian number, all below 50, a sector very much beaten up by the coronavirus, by the pandemic. Services not a place you want to be right now, it would seem. Now let's turn our attention to green bonds, and sales are expected to grow by a third this year to record levels. That's as governments and companies look to capitalize on booming demand, at the same time as bolstering their images. Now, sustainability-linked bonds in particular are exploding in use this year, but with no globally standardized approach and robust set of data to compare, it can be difficult to find out whether a company is truly green or whether it's greenwashing. Let's speak now to Helena Lindahl, Storebrand Asset Management Portfolio Manager. Helena, you spent a lot of time thinking then about green bonds, and I wonder, where are the gaps for you? Where is it that we don't fully understand just how green some of these green bonds are, and where do we have full transparency?
Good morning. I'm here with you from a beautiful sunny Stockholm today. Basically, what we're talking about here is opening up a completely new fixed income market. I mean, in the fixed income market, we work sort of with the use of proceeds language for so long. And basically, in the documentation, it says that the corporate can use the proceeds or the money we lend them to basically whatever their purpose is. But I mean, with the start of the green bond market 10 years ago, we have a completely new set of language that the investors demand more transparency, and we want higher sustainability level in the bond overall. And now we've been doing green bonds for 10 years, and it is a fact that the green bond format doesn't really fit all kind of corporates. You have to have a green pool of assets that you can finance, but many corporates in the production or the basic industries don't really have that pool of assets because they are producing it. So recently or last year, we had a new twist on the sustainability linked bond, where the corporates basically say that, well, I will attach some sustainability promises into the language of my documentation, and that is basically what the sustainability linked bond is.
Is it too easy to be classified as a sustainable or green bond, Helena, at the moment? Is it too easy for corporates to benefit from that kind of label?
basically, I mean, any corporate can set up a green bond or a sustainability-linked bond and present it to the market. And basically, all of them will come under the scrutiny of the investor community. And I'm pretty certain that myself and my organization and all of my colleagues around the world are doing the best we can to sort of pick the wheat from the axis, basically, and I am certain we do.
Okay, it's not just corporates that are raising money in this fashion and labeling them this way. It's also governments, Helena. We saw just this morning, Italy opened its books on its inaugural sovereign green bond. The UK government is going to do the same. How big is this sector going to be in relation to the regular sovereign bond market?
I mean, if I can take the Nordic area as an example, I mean, I think the Nordic area has been in the forefront of the development of the green bond market for the past 10 years. And if we just look at the numbers last year, it was like 30% of all the issuance. So 30% of all the issuance was labeled green and sort of provided the investors with a higher transparency and a higher sort of sustainability level. And I sincerely hope that my colleagues around Europe and the rest of the world will follow suit, that the Nordic development. So, and now also that we have the EU legislation kicking in with the taxonomy due in a year, and so I mean the sort of the transparency and the green bonds and the sustainability linked bonds, they are here to stay.
Okay, they're here to stay, and in fact, we're hearing talk of nature bonds, even greener bonds, focusing in on biodiversity. But that conversation around protecting the natural world for another day. Helena, thank you very much for joining us. Helena Lindahl, Storebrand Asset Management Portfolio Manager, thank you for joining us. We are getting a glimpse of the services sector in Europe, or more than a glimpse. We're getting an assessment of it today through the services PMI numbers. Once again, we've got a number coming in ahead of estimates. So this is the French PMI services number, 45.6, against a prelim of 43.6, ahead of estimates, but it is still below 50. No surprises, we're seeing that sector in contraction right now. Coming up, we'll look at what's moving in the markets ahead of the UK's budget statement later today. We have some strength coming through on European equity markets. US futures also pointing to the upside. Not great visibility in the real world when it comes to the London skyline, as you can see there. We'll be back on the markets next. This is Bloomberg.
Valuations, particularly, sort of the technology landscape, have gotten to some pretty extraordinary levels. So I think it's not a surprise. I don't think it's any indication of the beginning of the end, but I do think markets don't like uncertainty.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the European Market Open. We are nearly an hour into your trading session here in Europe, and we have some green on the screen. We're certainly up very strongly here in the London market, up by more than 1%. Joining us now, Laura Cooper, Bloomberg's Market Live macro strategist. Laura, is this all about the budget, pre-budget excitement? Is that why we see such performance in London and very broad-based gains coming through on the London market?
Well, I certainly think most investors are looking towards the UK budget today, and I think really the government faces just a tricky balancing act. They're going to want to have just that, setting that path to a recovery. We do expect that furlough to be extended, so we are seeing some of that play out in those upbeat kind of hospitality stocks today. But I think what will be crucially important to focus on is really those longer-term deficit projections. Will those be wider than expected? Will we see a potential greater degree of austerity in the near term? I think those things are going to probably play out in a weaker pound. But then against that, we also have potentially upbeat growth prospects. So how realistic are those things? So I think certainly there's a lot of factors for investors to consider today. And I think we're kind of in this waiting period in the UK, awaiting to see what comes out at 12:30.
Yeah, absolutely. And no doubt pub stocks, house builders, the banking sector, all poised for the detail of what the Chancellor has to announce, and anybody in retail, of course, as well, and hospitality. Laura, thank you very much. Laura Cooper, Bloomberg Markets Live macro strategist. We've been building a picture of the services sector across Europe. That continues. Right now, we have the German number coming in to slot into the mix, 45.7. So that is almost the same as the prelim, a little bit lower, in fact, than the prelim number. But it is, as we've seen for the rest of the European numbers we've had coming through this morning, it is below 50. So services very much in contraction in the month of February. The euro has been led on a merry dance, as you can see by these numbers coming through. A spike up around half an hour ago, but a drop, and now around 120.80 is where we trade. That is it for the European Market Open. Surveillance early edition is up next. Plenty of coverage as we build our way towards the UK budget a little bit later, and we'll continue our focus on the European growth story as well. This is Bloomberg.
women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is the 1980s all over again, to make sure that we keep our hands firmly on the driving wheel.
I do not see demand coming back to the pre-COVID level anywhere earlier than the end of 2022.
If that happens and we see a demand recovery, then I think the market can absorb it.
It's too early, I think, to judge by how much taxes will need to go up.
All the things that previous generations benefited from are not there, and the pandemic has only made that worse.
If you take money out of people's pockets, they'll tighten their belts and spend less.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance, the early edition on Wednesday, 3rd of March. I'm Francine Lacqua in London, and here's what's coming up on today's program. Budget Day. Yes, it's here. Rishi Sunak extends the UK's furlough scheme to September, protecting millions whose jobs were suspended during lockdown. During today's budget, he's expected to lay out plans to hike corporate tax. Warren's wealth tax, the Massachusetts senator says her new act could raise $3 trillion over the next 10 years. Well, President Biden says the U.S. will have enough shots to vaccinate all adults by May. More from our interview with Elizabeth Warren shortly. And Goldman's exodus. Bloomberg learns chief lawyer Karen Seymour is set to depart the investment bank. That takes a tally of 4 senior staffers exiting in as many days. Now let's get straight to our top story. And Rishi Sunak will today pledge to use the UK government's fiscal firepower to protect jobs and livelihood. Well, in his annual budget statement, he will also signal the need for future sacrifices to pay down the huge debts accumulated over the past year. Let's now get more with Bloomberg's Lizzie Burden, who joins us to really talk about the UK budget. Lizzie, first of all, what can we actually expect from the Chancellor today?
Well, first of all, Francine, the biggest challenge facing the Chancellor is the prospect of a jobless recovery, the idea that GDP could bounce back, but a high level of unemployment could linger. The Resolution Foundation says it's the lowest paid workers who are most likely to lose their jobs in the next 3 months. So that's why we're expecting Rishi Sunak to extend support through the furlough scheme, but all of those measures are going to cost. And Rishi Sunak's next big headache is the public finances. Since the last budget, we've had 13 major fiscal announcements. The next chart, nothing tells it better than this. It's pushed public borrowing up to a peacetime high. So the question is whether Rishi Sunak's going to deal with that now or signal that he's going to deal with it later. We're expecting a gradual rise in corporation tax by the next budget. But crucially, even though Rishi Sunak says he's got a sacred duty to fix the public finances, he is not going to want to abort the recovery. And every economist I've spoken to has said a premature fiscal tightening will do just that.
So, Lizzie, given what you've just explained, how difficult is it to also predict GDP? What are we expecting from the OBR?
Well, yes, we're going to have the Office for Budget Responsibilities forecast out alongside the budget today. This is Bloomberg Economics forecast for GDP over the next 5 years. You can see this bounce back here. But remember, the Governor of the Bank of England, Andrew Bailey, says people are going to go for it when restrictions are lifted. Will they go for it? Will they spend the savings they've accumulated in the pandemic if they've been lucky enough to do that? If tax rises are on the horizon, we'll be looking out for that from the OBR today.
Thank you so much, Lizzie Burden, there from our economics team. Now, this is a man with the plan. Don't miss, of course, our coverage of Rishi Sunak's budget all throughout the day at 12:30 p.m. London time. The UK Chancellor will unveil the recovery route in the Commons, and then you can stay tuned, of course, on Bloomberg TV with the most insightful analysis. Now, let's get to our top market story today with a lot of budget, also a couple of ADP figures actually ahead of the non-farm payrolls in the U.S. So let's get straight to our Danny Berger with what she's looking at. Danny, where are you seeing most of the action?
Well, look, it is a feeling of wait and see when it comes to the UK markets. That picture Lizzie painted for us of a deficit that's absolutely ballooning, what that looks like in the future, of course, is going to be very key for these assets. So we're looking at a pound that's more or less just sort of hanging tight. ING does think that with the government support we're about to get, we could see sterling hit about 1.5. But again, not a lot of action there yet as we wait for 12:30. We are seeing gilt yields move higher. Again, that borrowing binge, is that going to push yields even higher? But Francine, where we are starting to see some anticipation, some of the budget getting priced in, is definitely in the stock market. FTSE 100 up more than 1%. The domestic companies up even more. And that's because we could see things like a VAT cut extended. We could see some of the property tax relief extended as well. That means a lot of these chain sort of hospitality places like JD Wetherspoon, Cineworld are gaining a lot today. I mean, Cineworld, that's a stock that's been absolutely battered over the past year. And home builders, of course, any sort of support there when it comes to the budget. So again, already, even though we're seeing the macro moves hold tight, it really is these stocks that investors are going ahead and snapping up before that 12:30 announcement, Francine.
Danny, thank you so much. I can't wait actually to go to the cinema. That will really be an event. I can't wait for the James Bond movie to come out at some point, right? We've been waiting it for like 2 years.
Yeah, I don't want to stream that. I want to go to the theater and watch James Bond.
Right, so it has to happen soon. Thank you so much, Ardani Berger. Now let's talk a little bit about pound. Our next guest recently upgraded his forecast for sterling in the wake of negative rates being stricken by the Bank of England's policy agenda. So let's see what he has to say about today's budget. Joining us now is Jeremy Stretch. He's CIBC head of G10 FX strategy. Jeremy, so given what we know about the budget, we're expecting a bit of news on corporation tax. Good morning. And what we know about furloughs, what are you expecting pound to do?
Well, you're absolutely right. There is a massive information that we are expecting today, and I think the growth trajectories, I think, will be hugely important. So from the OBR presumptions, I would agree entirely with that metric from the Bank of England that we are expecting a pent-up degree of consumer demand to come out in Q2 and Q3. So despite that prospect of some degree of tightening in terms of personal taxation over time, I don't think that's going to deflect the consumer from coming back to spend, because as you quite rightly say, people want to go back to cinemas, restaurants and spending. So I think that will encourage the growth trajectory to move higher, and I think that may well limit some of the explosion in terms of the deficit levels. So for me, I think that provides still a reasonably constructive backdrop for sterling. So you're right that we've upgraded our forecast over the course of the last few weeks, and I think we can and should see sterling remaining relatively well bid on the back of the presumptions today, and I think sterling can maintain its path of the best performing major, at least in the short term, versus the dollar, and we can see a move back into the upper 140, 141 area in the near term, but moving back towards those 2018 highs up towards 143 3/4 over the course of the next 3 months.
So, Jeremy, what's your take on negative rates? Are we ever going to see negative rates from the Bank of England? And if so, at what point in the recovery would they make most sense?
Well, I think the negative rate story is one which has diminished in terms of its impact. I think the prospect of the growth trajectory, I think, obviates the necessity to consider that as a possibility, although it's very prudent for the Bank of England to maintain that the process remains in the toolbox and to be operationally ready in order to facilitate that if it's necessary. But I don't see any particular reasoning or justification for negative rates under the current scenarios that we're looking at of a broad-based macro recovery. So you'd be looking at some kind of systemic shock, so that would probably be a pullback in the vaccination process or a mutation which is going to extend the COVID crisis through the rest of this year. So I think negative rates are likely to be off the agenda. I know there can be some discussion about perhaps seeing a little bit of a driving force for the consumer in Q2 to Q3 to try and influence consumer spending even further, but I don't think that amplification in terms of additional monetary stimulus is going to be required. So I think we are at the trough in rates here, and we will eventually be seeing the next move in rates being up, although of course that's still some way into the distance.
Jeremy, I know today we're also, going to hear from Nicola Sturgeon giving evidence to, in the Salmon inquiry. Does it change? I mean, this seems like a local issue, but actually it goes to the heart of, the referendum in Scotland and what will happen to Scotland. Could that change your pound trajectory or not?
I'm not sure it will necessarily change specifically the pound trajectory, but it is something that we do need to keep in mind. And so in a sense, of course, the UK has been riven by referenda and election results over the course of the last decade or so, going back to that inconclusive election back in 2010. So we've seen this period of political instability. We saw that Scottish referendum, which was relatively easily won by the unionists. But of course, that dynamic has changed as we've seen the UK exiting the EU against the wishes of the Scottish people, and we've seen this continuation of a positive approval rating for Scottish independence. Now, if there were to be a systemic issue in terms of the Scottish political spectrum ahead of the elections in May, and that destabilises and derails the SNP leadership, the Scottish National Party, then that at the margin will reduce the propensity or the risk of another Scottish independence vote, and that might at the margin just provide a little bit of sterling impetus, but I'm not sure it's going to be enough to really change the trajectory, which already is, in our opinion, still reasonably constructive.
All right, Jeremy, thank you so much. And of course, Nicola Sturgeon, they're giving evidence to the Salmond inquiry. So we're just looking at those live pictures. Of course, we'll bring you any breaking news that comes out of that hearing. Jeremy Stretch, CIBC head of G10 FX strategy, stays with us. Now, you should also stay with us on Bloomberg TV because we'll bring you the most insightful coverage on today's budget. Rishi Sunak will unveil his plan for the UK recovery. That's from 12:30 p.m. London time. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment. The politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacquet here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Italy is tightening its virus restrictions as the country is seeing a surge in cases. The measures are the first approved by new Prime Minister Mario Draghi. They will take effect this Saturday and remain in place until April the 6th. It also includes an extension to travel restrictions between regions and a curfew. Now, OPEC Plus is set to agree to a production increase this week as it seeks to cool a rapid rally in oil prices. Bloomberg sources say there is a widespread view within the group that the market can absorb additional barrels. Saudi Arabia does remain cautious. Russia is keen to open the taps, but we are told all sides are ready to increase production. And lawmakers in New York have agreed to curb emergency powers granted to Governor Andrew Cuomo at the start of the pandemic due to an escalating scandal. Cuomo is facing an investigation and calls to resign over accusations of inappropriate behavior with women and questions of his administration's cover-up of data on deaths in care homes. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, Senator Elizabeth Warren is calling for a wealth tax again. The Massachusetts Democrat says her ultra-millionaire tax act would raise $3 trillion over the next 10 years, arguing that it could help fund infrastructure, childcare, and education. Well, she spoke with Bloomberg's Kevin Cirilli in Washington, D.C., who asked if the former Treasury Secretary Larry Summers was right to worry that Biden's proposed stimulus would lead to runaway inflation.
He's wrong. Look, we should have learned the lesson. Number one lesson from the 2008 crash is that when you don't put enough into recovery, recovery is slow, and some folks never get a chance to get back to where they were before, much less be able to thrive and go forward. We need a full, strong, robust recovery. That's what the Secretary of the Treasury says. That's what the head of the Fed says. That's what the top economists in this country say. So I think we got to do this.
What about the minimum wage? Because it's looking like the minimum wage is not going to be included in this, and many progressives want to see that included.
Look, I'd love to see it included. The problem, ultimately, it's the filibuster. We're trying to get the minimum wage in through a package in reconciliation because we want to do it by majority vote. We think that a majority of people will vote for the minimum wage, that we can make that work.
One of the questions I get from Republicans when we talk about all of these different plans is, well, how are they going to pay for it? You've got an idea.
I do.
The wealth tax. Explain it to me, because you've tweaked it from the last version.
So let's remind everybody what it is. This is on fortunes, a tax on fortunes that are bigger than $50 million. So your first $50 million is free and clear, no tax at all. But your 50 millionth and first dollar, 2 cents. And 2 cents on every dollar above 50 million until you hit $1 billion. And then we add a little bit more on top of that. That would raise over the next 10 years $3 trillion.
What do you want to do with that money?
Oh, look, there's so much we could do. We could do universal child care. We could do a big infrastructure package. We could do more on racial equity. We could do an environmental package.
Democratic Senator for Massachusetts, Elizabeth Warren, there speaking with our Kevin Cirilli. Now, still with us is Jeremy Stretch, CIBC head of G10 FX strategy. Jeremy, quite a lot going on, of course, in the U.S. With there was also the first setback for Joe Biden, the president, in filling his cabinet with someone, a lot of opposition actually to Neera Tanven. But overall, you know, with the stimulus, does it support dollar, or is there going to be renminbi trying to kind of take the top crown?
Well, I think we're still in an environment where I think the US dollar is set for a degree of underperformance, certainly against those high beta commodity currencies or those that are much more growth orientated. Because I think if we are in an environment where we are going to see this US stimulus coming through, and we are continuing to see the better news or the presumption of a recovery trade globally as the COVID crisis gradually edges to the sidelines, then I think we can see the dollar underperforming overall. We have seen obviously this significant uptick in nominal yields over the course of recent weeks. But I think if the Fed can maintain this prudence and patience in terms of their policy perspective, then I think we can and will see those high beta commodity currencies outperform, and the US dollar will probably broadly range trade against some of those other lower yielders. So I think it's more about the story of the recovery trade and the reflationary currencies continuing to be the net beneficiaries of this recovery trade. And that includes the Chinese currency, of course, which will continue to appreciate overall against the US dollar throughout this year and into next.
We have a question from a viewer, Jeremy, and this is basically, is the world reflating, or have we merely avoided deflation?
That's a very good question, because of course we have seen very strong deflation, or more appropriately disinflationary tendencies over the course of the last decade or so. And I think what we will see is a bout of inflationary pressure as we start to see the base effects playing out over the course of the last 12 months or so. But I'm not sure necessarily we are in an inflationary environment, but I think we have avoided those disinflationary tendencies over time. And so I think that underlines that we're not in a scenario which requires immediate or aggressive policy responses, but we have avoided those deflationary questions or pressures which were clearly compromising markets over the course of recent periods.
Jeremy, thank you so much. Jeremy Stretch there, CIBC head of G10 FX strategy. And one thing that also caught my eye today was actually Scott Minerd of Guggenheim saying that he's expecting he's not expecting, but it's a possibility that the 10-year yield in the U.S. goes negative. So we talk about reflation buzz, but the counterfactual is always a good thing. Now, coming up, the exodus from Goldman Sachs. 4 senior staff quit the company in as many days. We'll talk about why next with our Elisa Martinuzzi and discuss her column about why New York is still beating out Europe when it comes to banking. This is Bloomberg.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the exodus of senior staff at Goldman Sachs is growing. In the last week alone, Bloomberg has learned that 4 top staff of the investment bank have quit. The latest in Goldman's most senior lawyer, Karen Seymour, who was picked for the role in 2017 by then-chief executive Lloyd Blankfein. Now, other high-profile exits have included asset management co-head Eric Lane, who's said to be leaving for hedge fund Tiger Global, and head of consumer banking Omar Ismail. Now, joining us to discuss all of this is our finance columnist for Bloomberg Opinion, Elisa Martinuzzi. So first of all, Elisa, there have been such high-profile departures at Goldman Sachs. What does that tell us?
Well, it might be easy to conclude that there's something, at Goldman that's pushing them, but I think it reflects a couple of things. On the one hand, you have had a terrific year at Wall Street. So if you're trying to move on to the next thing, this will be the best time to negotiate your next step. Equally, you have industries that are buzzing, industries that are growing exponentially, such as the fintech industry. Some of these executives are joining Walmart's new venture in that space. So I think you have a combination of a lot of opportunity and equally probably one of the best times ever to try and negotiate if you're moving away from Wall Street and Goldman. Don't forget, last year was tremendous for trading revenue, and this year, it'll probably be better than 2019, but it certainly isn't going to be another 2020.
So at the same time, Elisa, as these high-profile exits, Goldman is also hiring 100 new tech staff in Singapore. Does that really give us an indication of what strategy they're looking for?
Well, again, I think there are a couple of things here to look at. One is the technology focus, and most of these, as I understand it, will be individuals working on technology, in particular their cash management product. This is one area where Goldman definitely wants to grow. Part of the reason is to sort of flatten the volatility of revenue and earnings that are tied to trading. Cash management is a much more regular type of business, and it also draws deposits, which lowers Goldman's funding costs. There's also the opportunity by building out in Singapore to help rebuild its reputation in Asia after the 1MDB scandal. Of course, business carried on as usual, but certainly it will help in rekindling those relationships in the region.
Your most recent opinion column, Elisa, first of all, is fantastic. So congratulations, as always, and I always urge everyone to go and read them. But it's basically about how European banks are still dwarfed by U.S. competitors. How much does it matter, and is there any chance of that changing?
Well, it's interesting because you could look at it as just a pure horse race between Wall Street and Europe, but it does matter particularly for Europe because this is an industry, the securities trading industry, where European banks have struggled after the financial crisis to generate sustainable profitability because regulation has made them more costly. They stayed in too many businesses for too long. But Europe needs to deepen its capital markets, and ideally it needs its own banks to help it do that. So it's important that they remain significant, that they remain competitive, and that they remain in the game. So there's definitely that angle. And I think what you have this year is, of course, with Brexit and potential fragmentation of the markets here, that's going to be another headwind. So I think there's more to it than just who's winning and losing. It has some potential repercussions on the growth of the economies here.
Thank you so much, Elisa Martinuzzi, as always. And I really urge everyone to check out this column, all of Elisa's columns, actually. You can also subscribe to them on the Bloomberg terminal or Elisa Martinuzzi covering finance. Now, Rishi Sunak could use today's budget to boost London SPACs. Are they a craze or just another way to access equity? Up next, we discuss with Helen Steers from private equity firm Pantheon. Now, we'll have, of course, a lot of news on what's going on in the markets. This is overall what I'm looking at. Treasuries are slipping. Stocks are rising with U.S. equity futures. This is Bloomberg.
These solar arrays that we're going to install are going to be about half the size of the existing solar arrays that we have on the International Space Station. But because of the advances in technology over the years, they're going to provide about twice the power in just half of the area that the existing solar arrays cover.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Budget Day. Rishi Sunak extends the UK's furlough scheme to September, protecting millions whose jobs were suspended during lockdown. During today's budget, he's expected to lay out plans to hike corporate tax. Warren's wealth tax, a Massachusetts senator, says her new act could raise $3 trillion over 10 years, as President Biden says the U.S. will have enough shots to vaccinate all adults by May. Well, more from our interview with Elizabeth Warren shortly. And Goldman's exodus, while Bloomberg learns that chief lawyer Karen Seymour is set to depart the investment bank. That takes the tally of 4 senior staffers exiting in as many days. Well, good morning, everyone. I'm Francine Lacqua here in London, and this is Bloomberg Surveillance, the early edition. Now, Rishi Sunak will unveil his budget later today. In it, the UK Chancellor is expected to announce a reform in stock exchange rules around blank check firms. Now, Sunak's plan comes as part of a wide-ranging reform to boost the attractiveness of London after Brexit. Yesterday, we spoke to the Tikehau co-founder, Mathieu Chabran, and he told me that SPACs are only another way for companies to access equity.
I really think that SPAC is just, another alternative to provide, equity that is well needed. European companies need, access to equity, and that, be by way of, private equity, by way of direct listing, or by way of SPAC. So effectively, there's a lot of, comment and a lot of question marks around SPAC, but I would not go beyond effectively this being a new technology that can provide long-term permanent capital to European SMEs that effectively need that badly.
Well, to talk about private equity and the SPAC world, Helen Steers, Pantheon partner. Pantheon International is the longest established private equity fund of funds on the LSE, and Helen joins us to examine the fundamental themes in private equity accelerated by the pandemic. Thank you so much, Helen Steers, for joining us on Bloomberg Surveillance. When you look at what COVID, the legacy of COVID and the pandemic, is now a good time to deploy cash to actually buy things up?
No, absolutely. We believe that there are several fundamental themes that were really pre-existent, long before COVID came along, that have effectively been accelerated by the pandemic. So those 3 themes are digital transformation of businesses and consumers, healthcare, which has been the theme for some time beforehand, and really importantly, an enhanced focus on ESG.
Where does it mean that where do you see actually the biggest opportunity? So if you look at your portfolio, how has it changed because of the pandemic?
So I think that one of the changes has been in regarding digitalization and information technology, actually, not just as a vertical, but also as a horizontal. So really affecting every sector across the economy, from consumer to financial services. So that's been quite exciting, and sort of investment opportunities we're seeing now are those where digitalization is really accelerating the growth of these businesses.
Where do you see the most, the most value to be made, or is there something that's unloved at the moment that you're zooming in on that could actually make a difference in the next 12 to 18 months?
We invest pretty widely across the economy. So we're really looking more for these sort of fundamental themes that will affect every sector. And we also, of course, invest on a global basis. So we continue to invest in the US as well as in Europe and in Asia and emerging markets. But I think this digital underlying theme is the one that we're really focusing on. I think, interestingly, you've really got to look at the bottom up. Private equity is particularly good at finding these sort of micro opportunities, very nimble, very fast to move, very good at focusing on these sort of niche areas, which are probably overlooked actually by public markets.
How much money is there out there in private equity? And if there's a lot, are we going to see automatically bigger private equity deals?
So it's an interesting question. I mean, the private equity industry is now about $5 trillion. That sounds like a lot of money until you put it in context with what goes on in public markets. And there it's really just a blossom, a sort of blossom of the landscape. It's 1.5% of US GDP. So we think that private equity and actually private capital in general will continue to grow as public markets shrink, in fact, in terms of the number of quoted companies. And there's probably good reason for that. Private equity now can assemble the sorts of rounds of financing that you need to be able to accelerate the growth of these companies, and without having to go to public markets. And there's all sorts of reasons that companies will choose to remain private actually for longer.
Where do you see the main risk in private equity right now?
So I think some of the risks are clearly in certain sectors. There's some valuation challenges, and there it's really about looking at those fundamentals and finding ways to create value, and that may be both through organic growth, but also inorganic growth. That's sort of a technique that private equity players use a lot, is buying a platform company and a lot of add-on acquisitions, which will help to sort of buy down that entry multiple, and then using all the levers that private equity can use in order to add value, and then looking for the exit at the end of sort of 5 to 6 years. But one of the advantages of private equity is that it's a long-term asset class, it's patient, and therefore private equity investors are not looking just to invest today and exit tomorrow. They have a long-term horizon, and in that period of time, they can create value within the portfolio companies.
Helen Steers, thank you so much for joining us today with all of that insight. Helen from Pantheon Partner. Now, we're just getting a little bit of news out of the ECB, and I think that's moving not only Italian yields, but also German bunds. Of course, Italy also affected by what we heard from Mario Draghi in terms of extra funds needed for COVID. The ECB saying that they will, we understand, said to see no need for drastic action to curb bond yields. Again, this was after we had multiple governing council members speaking out to say that higher yields may be unwarranted and could undermine the Eurozone as it struggles with extended pandemic lockdowns. So the story of the last couple of days was that the ECB and some of the Asian central bankers were maybe ready to step in, maybe with some bond buying program to counter what we saw in terms of market moves in the last 10 days. And we had said at the time that the Fed and also the Bank of England were remaining with cooler heads. Now we understand that the ECB sees no need for drastic action to curb bond yields. I think that's a Bloomberg story through our reporting, so we'll really try and get that confirmed because that's significant for all bond yields in the Eurozone. Now, coming up, we speak to Europe's largest generator of renewable energy. Statkraft President and Chief Executive Christian Rienin Tonnessen joins us to discuss the impact of record low power prices on the company and green energy solutions. This is Bloomberg.
En nuestro país, igual que los demás países del mundo, no están preparados para esta pandemia. Más aún, los más afectados son los países de desarrollo como el nuestro, ¿no?
I'm David Weston. Bloomberg Television is reinventing one of the most iconic brands in financial television for a new audience. Join me to see the news program for the clever investor. This is Bloomberg Wall Street Week.
There's no doubt that the furlough scheme over the course of the last 12 months has been a lifeline for so many retail businesses and other businesses impacted by the pandemic. It's saved not just hundreds, but not just thousands, hundreds of thousands of jobs over the course of that time. So the fact that it is being extended is really good news.
Well, that was Helen Dickinson from the British Retail Consortium welcoming Rishi Sunak's furlough scheme extension. Stay with us on Bloomberg TV. We'll bring you the most insightful coverage on today's budget. Now, the Chancellor, Rishi Sunak, will also unveil his plan for the UK recovery. That's at 12:30 p.m. London time. Now, let's get straight to your Bloomberg Business Flash. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. Germany's financial regulator BaFin is close to freezing payments at Greensill Bank, an arm of Greensill Capital. Sources tell us the move could come at short notice. It is one of the strictest actions a regulator can take, designed to preserve what is left of a lender, so depositors and creditors get as much money back as possible. No official comment from BaFin or Greensill. Now, declining coronavirus cases may be given ride-hailing firm Lyft a reprieve. It says the last week of February was its busiest in terms of the number of rides since the start of the pandemic, and it expects the increases to continue into March. The firm is forecasting it will lose about $135 million this quarter, but says the worst is now in the rearview mirror. And the exits are stacking up at Goldman Sachs. Sources say its chief lawyer, Karen Seymour, is leaving. It is the second departure from Goldman's top decision-making group in as many days after the exit of its co-head of asset management. The Wall Street Bank is also dealing with the departure of its consumer bank chief. And that's your Bloomberg Business Flash. Francine.
Thank you so much, Leanne. Now, record low power prices last year hit the profits of Statkraft, Europe's largest generator of renewable energy. The Norwegian state-owned utility reported a 60% fall in profits, while total revenues fell by a fifth as wet weather boosted supply and mild weather cut demand. Well, Statkraft expects a surplus of power in the region to increase in coming months. Well, joining us now is Christian Rinning-Tonnesen, the Statkraft president and chief executive. Thank you so much, Mr. Rinning-Tonnesen, for joining us on Bloomberg Surveillance. When you look at the years to come, it's difficult to predict the mild weather and the demand for some of the energy that you produce. But is there a danger that actually your profit will be cut significantly if this lasts a lot longer?
Hello, thanks for inviting me here. No, what happened last year for Statkraft was that the electricity prices in Scandinavia in particular fell to a very low level in 2020. But that was not mainly caused by the pandemic, but by a huge amount of snow that was melting during the year. So that has changed now. It's more normal weather situations. So already the power prices are back up on what we consider to be a normal level again. So we don't expect the low earnings of last year to be repeated this year or further ahead.
So, Mr. Rinning-Tonnesen, when you look at some of your earnings, you're expecting, I guess, better years ahead. Is there a natural hedge that you can do to make sure that if years continue to be wet and mild, you can somehow hedge with something else?
Well, What we do is we are selling about a third of expected production in advance, like a hedging on long-term contracts and financial contracts. So that gives a stable income of roughly 1/3 of the total. As for the rest, we have big hydro reservoirs in Statkraft. As a company, we have almost a quarter of all stored hydropower in total Western Europe. So that means when power prices are low, we keep holding the water back, storing the water for later, and when prices go up, we produce more again. So that increases the volatility of earnings by the quarters, but it stabilizes the income of Statkraft seen over a longer period of time.
Did the fierce resistance to onshore wind power in Norway actually make you shift strategy to invest in some of the offshore projects?
Yes, we just completed Europe's largest onshore wind project in Norway last year, the Fosen project. So we are very satisfied with that. So we are still investing a lot in onshore wind, both in Norway and outside. But yes, we did announce that we are now entering into offshore wind on the Norwegian continental shelf, starting the planning there together with another Norwegian company named Aker. So that is, to some extent, a consequence that we believe offshore wind will grow in Norway as well as other places, as a result that there are limited acceptance to construct onshore. For that reason, we are also looking offshore, yes.
Will you do many more projects offshore? Is it something that you could increase significantly in years to come?
No, our strategy as of today is to be large in hydropower and onshore wind and solar power. We just acquired Solar Century based in London, by the way, last year for that reason. In offshore wind, we expect some growth, but not at all in the same magnitude as we plan to do it in hydropower, onshore wind and solar.
So there's a huge electrification process going on, right, with hydrogen projects, but also industrial electrification. Will there be enough power in the Nordic region to service all of those projects?
Yes, in the Nordics, especially in Norway and Sweden, we have a big power surplus as of today, and we do expect much more renewable electricity to come on stream. That is more onshore wind, although less than if it had not been resistant, of course, but still quite a lot, and also offshore. Plus, we are expanding the hydropower production as well. So, and also solar to some extent is coming here up in the north. So all in all, there will be enough supply for all these new projects that we expect to come in hydrogen, green ammonia, and other new green electricity consumption.
Great. Thanks so much for joining us. Christian Rynning-Tonnesen there, the Statkraft President and Chief Executive Officer. Now stay with us on Bloomberg TV. We bring you the most insightful coverage on today's UK budget. Rishi Sunak will unveil his plan for the UK recovery from 12:30 p.m. London time. This is Bloomberg.
Percent of the world's trade travels by sea. At At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal turn for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
Really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I would suspect there's a pretty good chance you're going to see rates going up, and people starting to worry about that at one point.
Some of those moves last week and the speed of the moves caught my eye.
I think we obviously have control of the yield curve at the short end, and at the longer end, I think when it moves, it depends a lot on the driver.
We are seeing a multi-year stimulus unfolding in the US. There's a justified rise in real yields that central banks shouldn't be trying to fight.
If the driver is, as it seems to be, news about vaccines or news about health of the economy or news about fiscal stimulus, then I think it's a natural reaction.
I would be concerned if I saw disorderly conditions or persistent tightening in financial conditions.
The reason yields rise matter. The level, the speed, and the reason are all very important in determining the way that equities and different factors in the market behave.
I've been very clear. I would not buy 10-year treasuries, just so you know.
Well, those were a number of newsmakers commenting on the rising bond yields on Bloomberg TV. Now, Europe is seeing yet another selling in the bond market after the ECB said it sees no need for drastic action on bond yields. Well, Danny Berger is with us for the latest. So, Danny, I guess the surprise is that we had a number of council members of the European Central Bank in the last couple of days seeing the exact contrary.
Yeah, exactly. So this is a new thing for the market to absorb and take account of, because I think the idea really had been, and this even went into the U.S. markets as well, that yes, policymakers were willing to step in to combat some of the volatility, some of the higher yields, because of course that goes on to hurt, especially some of the economic sensitive companies. But in this announcement, we see BTP yields hike higher. We also see it impact U.S. yields too. This was really a cross asset move from this news. So German bond yields moving higher by about 3 basis points as well. But really sort of the calm in the U.S. market that we had seen was because more U.S. policymakers starting to sound like what the ECB had, what Lagarde had, of course, before this breaking Bloomberg News story, with Brainard saying that she would be willing, that the higher yields, the volatility could be a problem and would make them delay any pullback in buying on that balance sheet. But that has so far been supporting U.S. futures. We're seeing the NASDAQ, for example, bounce back, and it really has been some of those big momentum-y type names that dragged down the U.S. market yesterday. So Tesla, Apple, for example, they were leading the sell-off in the U.S. market. Pre-market, they are trading higher, but I should say, Francine, this is not as high as they were before that ECB head. That really is impacting markets around the world because, again, traders are having to reassess just how willing central banks are to step in to help with higher yields.
Yeah, I mean, it's an amazing story, actually, because it goes back to the communication of central banks, right? And we were saying a couple of days ago that this is about the credibility, and you squarely saw the Fed and the BOE saying, guys, we're cool about what's going on, and then some of the Asian, central bankers with the ECB saying they were ready to step in. So we'll follow that story very closely. All right, OPEC Plus. they may have found an agreement.
Yes, they may have. And so far, that agreement means that we are seeing markets, oil markets rather, go higher today. That's after 3 days of decline. The agreement would be an output expansion. I think the idea behind this and why oil markets are reacting positively is the overriding view is that the market can absorb this. And it also lends itself to this idea why commodities and oil and really a lot of these inflation-sensitive assets have done better. It's that the economy is improving, that the demand is going to be improving as the world normalizes. So I think that OPEC Plus meeting, the outcome of it might lend itself more to that sort of narrative.
Danny, is there anything else? I mean, apart from yields, we also have, I think, the ADP employment figures in the U.S. that sets up us nicely for non-farm payrolls.
Yeah, I think that that's going to be really interesting because, look, talk is cheap. ECB, central bank, that can sort of move markets here and there, but data really means a lot. If we're getting really strong data out of the U.S., if we have a really strong print, which we are expecting in the February numbers, that will sort of increase this picture of an economic recovery and perhaps inflation that central banks will ultimately need to do something about.
Danny, thank you so much. I know Danny Berger is also looking at when James Bond will be released, because I know she had a market mover on Cineworld, but actually the real story is when will we be entertained, Danny?
Yeah, I can't wait for that, Francine. I'm ready to get out of the flat.
Yeah, me too. Bloomberg Surveillance Early Edition continues in the next hour. Matt Miller joins me out of Berlin. Kaylee Lyons will be in New York. We'll, of course, look at those ECB headlines. We'll look at bond yields, and then, of course, Matt Miller has an important interview with a central banker a little bit later on. This is Bloomberg.
Their CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
It's too early, I think, to judge by how much taxes will need to go up.
All the things that previous generations benefited from are not there, and the pandemic has only made that worse.
If you take money out of people's pockets, they'll tighten their belts and spend less.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Keely Lines.
Well, good morning, everyone, from London, Berlin, and New York on this Wednesday, March the 3rd. I'm Francine Lacqua with Matt Miller and Kaylee Lines. Now, there's a lot going on in the markets. I know we want to look at OPEC. We also just hearing that Greensill Capital may be in the process of filing for bankruptcy or insolvency here in the UK. But, Matt, if you look at European bonds, they're really moving on the back of this great Bloomberg scoop saying that the ECB could now be much more relaxed about market movements that we saw last week. But this is maybe a communication problem because we will, we had heard from some of central bankers that they weren't that relaxed.
Yeah, well, I mean, to your credit, Francine, you were making this point, I think, to kick off the week. And there are some central bankers who've chosen that course, other central bankers who've chosen to double down on purchases. So it's interesting to see which camp the ECB falls into, if indeed that is the case. We do see bunds coming back up right now to yield negative 32 basis points, which seems so close to zero to me. U.S. 10-year yields, though, are also jumping right now, getting closer and closer to, again, 145.
Matt, the interview of the day for me is definitely you speaking to the Bundesbank president, Jens Weidmann. I know you'll have one or two questions about yields and one or two questions about inflation.
Yeah, Germans, historically don't like inflation, and we're getting headlines out from the Bundesbank right now. Wouldn't you know it, Jens Weidmann says that Germany inflation in 2021 is slightly stronger than expected. So we can count on the Bundesbank to remain hawkish here, even if there have been over the past couple of years questions about the possibility that they would get more centrist. That hasn't been the case, and I will be talking to Jens Weidmann a little bit later on. Right now, he is giving the Bundesbank's annual report in Frankfurt.
Kelly, so once again, it's really about inflation, kind of bonds on the move.
Yeah, bonds always on the move these days, Francine, but equity markets are on the move as well here in the U.S. Futures pointing to a rebound from what turned out to be relatively steep losses in the Tuesday session. Of course, following on from the gains we saw in the Asian session and in Europe, the FTSE 100 outperforming in the UK ahead of that budget release a little bit later on. And it is tech that looks like it will outperform here stateside. NASDAQ 100 futures up by about 0.75%. As you were just discussing, the action, though, really focused on the bond market after those comments from the ECB. That is moving not only European bonds and bunds, as Matt was describing, but the U.S. 10-year yield up about 5 basis points as well. And I'm keeping a close eye on oil. Brent crude snapping a 4-day losing streak, up about 1.5% right now, even as OPEC looks to potentially increase supply at its meeting this week. The market seems to be taking that as a sign that that supply can be absorbed. But forget about oil. When we talk about green energy, those are some stocks that are really moving in the pre-market this morning. Fuel Cell and Plug Power each fell about 6 and 7% respectively in yesterday's session. These are momentum trades, richly valued, that maybe came under a little bit of pressure in that broader sell-off, but they're both up more than 3% in the pre-market this morning. And of course, EV maker Tesla rebounding from its 4.5% loss yesterday, up nearly 2%. It also had its price target raised to $730 a share over at UBS, Matt.
All right, very interesting look at some of those alternative power or alternative energy stocks there. I'm looking at the consumer. In this case, in the UK, there's a lot of reasons to look at consumers around the world as we see what looks like kind of a retail resurgence in at least U.S. earnings. This is the UK household savings spike in white that you can see here. And there was a huge jump as the lockdowns increased at the beginning of the year. It's still holding at 17% for those that can. They are saving money. The blue line, by the way, on the bottom, very interesting as well. UK real average weekly earnings change year over year. You can see that has drastically increased as we head into, Francine, the budget from Rishi Sunak.
Yeah, so there's a budget, there's a lot going on. There's a budget, and then after that Bloomberg story saying that the ECB sees no need for drastic action, there's also that important Matt Miller interview with the Bundesbank head. Now let's get straight to Kit Jukes. He's Societe Generale Chief FX Strategist. Kit, we were going to start the show by asking you about pound, but actually where do you see euro going? Given this miscommunication, I don't know if it's miscommunication or actually the ECB finally deciding that actually there's no need for drastic action given the market moves.
Yesterday, I thought it was going to break through 120. It looked as if there were too many things stuck against it. It's been in this really narrow range for a while. I think it's staying there for a while longer. I think eventually it breaks higher, but we've piled on pessimism about the European economic recovery, and we've piled on expectations that the ECB is going to outdove the Fed, if that's the right way to put it. And I think we're just beginning to sort of rock back from that a little. So I think eventually we'll break out up towards 125 and a little bit beyond. We have to hold above 119.5 for the next few days when the news flows negative. But I do think Mr. Weidmann's going to help a little bit, and it'll be interesting. There's really not much to be gained from trying to anchor European bond yields lower and lower and lower and lower at this point. They're low. What else do you want?
But so at the moment, the main message from the ECB seems to be no need to panic. So was it a mistake, for example, for the RBA and other central banks in Asia to move quickly?
I think a don't panic message is the right bit. I mean, certainly not to overreact, but to put some context around it. This starts in the States where, the market now prices Fed funds, give or take, back at 2% in over 5 years' time. So you kind of think, well, what the market's saying is as the global economy heals, monetary policy, like 5 years down the road, ought to be moving back to roughly where we think neutral-ish rates are. Well, that doesn't sound to me stupid enough for central banks want to have a fight. So the argument is only with the pace of adjustment. And the way you adjust, you deal with the pace of adjustment is say we don't want disruptive markets, and you can lean on that. But I think there's a big difference, saying, we're going to come in and buy more bonds and really attack this. I'm not sure that helps when the adjustment, because the economic outlook is better, because vaccines are being rolled out, the market is right to look forwards to eventual policy normalization.
Are vaccines being rolled out fast enough here in Europe, Kit?
No, but again, markets, if I turn around and say, what are markets pricing in for 2025? Vaccines having been thoroughly rolled out by then, so there's a difference of a month or two here or there, which makes it makes a big difference at a human level, and at a political level, it's important that we hold people to account. And it's going to affect now GDP data. But, does that really, for financial markets that are forward-looking, shouldn't we be looking through the kind of different pace of vaccine rollout from one country to another? Maybe if we do anything to say, Europe needs to get a move on, but probably will, what we really need to do is to make sure that the rest of the world, that the emerging markets, don't get left behind, because they can come back and drag us down if we don't get the rest of the world vaccinated. But for a few months here or there between one country and Europe and another, nothing to do.
Is it possible that the ECB just doesn't have as much firepower as the Fed? I mean, they're already deeply negative. And if I look at bank balance sheets, central bank balance sheets, the ECB, although not nearly as, it doesn't hold it nearly as much as Japan in terms of percentage of GDP. You can see here the ECB is blue, the Fed is yellow, Japan is red. It still has 60% of GDP already in holdings.
Yeah, it's got a lot of assets on board. More particularly, the marginal return from sending your yield from minus 30 basis points to minus 50 basis points. It's less effective than sending it down from a positive number to a lower positive number. So from here, this is what the ECB's been crying for a while. It's down to fiscal policy to get recovery. What they can do is try to, at the margin, push against market moves that they don't like. But this is small beer, really. The big decision in that sense is, can we can we sort out the fiscal rules for Europe in Brussels over the course of the next few days and get something better here?
Kit, so on the UK, Rishi Sunak extending this furlough program for UK workers until September. We'll know more about corporation tax. Where do you see pound?
I don't think the pound's got much more upside in the short term. Look, if global equities have a big up day, sterling will outperform the euro because that's how it works at the moment. But we've got a lot of good news in sterling now. I think it takes a pause because whatever we get from him, it's a message more or less of, I'm keeping policy easy today, but here's the growing list of things I'm going to do as soon as we think we're past the worst. We're going to pay higher taxes in this country down the road. They're going to get to grips with this. Austerity is coming. It's just how much you can lean against austerity now that matters. But I think we'll have to price in the fact that the UK economy is going to have a nice sugar rush when we start driving some of those savings down, when we can get out of lockdown. But the medium longer term outlook is slightly bleaker.
All right, Kit, thanks so much for joining us. Kit Jukes there is SocGen's chief FX strategist talking us through the Bloomberg scoop on the ECB. And I just want to reiterate, we've got in Europe's largest economy here in Germany, the Bundesbank out with some headlines saying that extended lockdowns in the second quarter would only delay the recovery further. So you've got Jens Weidmann, the head of the Bundesbank, pushing back against Angela Merkel. I'm going to interview him a little bit later on today. You don't want to miss that. Right now he's giving a live press conference, but when he's out of that, I'm going to hook up with him on Zoom or Skype or FaceTime or whatever, and we're going to talk through why Germany didn't pay out, why the Bundesbank didn't pay out a profit for the first time since 1979. Coming up on the program, Carsten Bresky, ING's Germany chief economist, joins us to talk a little bit about this. Maybe he'll give me some tips on questions I should ask Jens Weidmann as well. And then later today, UK Treasury Select Committee Chairman Mel Stride. That's at 11 a.m. New York, 4 p.m. in London. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
What kind of leader are you?
I'm a leader that works on figuring out destinations that we should aim for and then chooses the direction.
Technologies change and markets change, but we should always evaluate new approaches to markets and payment for order flow is something that I think the recent events, as you rightly pointed out, raises. It's important to look at economically and look at whether retail investors are getting best execution.
I want to see a full investigation. I want to know who was behind the scenes on some of the critical decisions that were made, including the decisions about who could trade and who couldn't at critical moments.
That was Senator Elizabeth Warren, Biden's SEC pick, Gary Gensler on the GameStop trading. Now, joining us, our Wall Street reporter, Sonali Basak. Sonali, we have a million things to talk about, but maybe let's start with Goldman Sachs. There are a lot of high-profile departures. Does that tell us that there's something wrong at the bank, or is it just that they've had a stellar year, people put off leaving because they were touching their bonuses, and now's a good time to go?
Well, that's exactly right, Francine. After bonus season, we tend to see people leave. And at Goldman Sachs, you know, if I remind everybody, we've seen this story before the last couple of years. With that said, these departures are in a lot of very high-profile businesses. These departures were leading a lot of businesses, and you don't see that many people leave at that level normally. So that is the difference. Some of the biggest departures were Eric Lane, who had been there for 25 years at Goldman Sachs. That's a pretty normal time to make a move, head over to the buy side. Karen Seymour, who was really the general counsel under the Lloyd Blankfein era. A lot of the bank's old troubles are behind them, and you see David Solomon setting up for another era, really choosing his deputy and a general counsel. Omar Ishmael and David Stark, the reason they're surprising is Omar had just taken over consumer operations, a new business for Goldman that they're really trying to build up. So really the onus is on the new team to make that work, right. And you see a new competitor at Walmart.
So, and Omar also, and those guys really are getting into new businesses where they get a big piece of the business. They have the chance to boost paychecks, maybe even double or triple what they're earning. Karen Seymour, I find the most interesting because typically a general counsel stays long into old age. And in October of last year, there was an allegation made that Goldman Sachs has denied that Karen Seymour may have covered up a sexual harassment issue. Is that maybe playing into this as well?
You know, that is, there's no way to know that, really. But at the same time, it's really not, you know, to your point, yes, it is true that general counsels do stay a long time. But again, they really are a confidant to the CEO, right? I think that the role of a general counsel is probably really underplayed here. And so it's not abnormal to see general counsel leave, and, you know, she will go off and have another big role in, with corporate America as well. So I don't think that that's totally abnormal, and it's hard to know what role that lawsuit had played.
Sonali, I want to go back to the SEC and Biden's nominee, Gary Gensler, who, of course, we heard from at the top there. Did you glean anything from his testimony yesterday about how he's going to approach regulation, specifically when it comes to some of those trading apps and the payment for order flow issue?
Yeah, there are two things. The payment for order flow issue is very interesting because it's true. He mentioned that the market-making industry is very concentrated, and there are actually 3 brokers, according to Bloomberg Intelligence's Larry Tabb, that have 74% of the payment for order flow payments. But with that said, Kaylee, if they got rid of payment for order flow, which they didn't say that they would do, it would be more harmful to the brokers like Robinhood than it would be for a firm like Citadel Securities. So it's a tough balancing act for regulators, and you heard really Gary Gensler say that what he wanted was more disclosure, really more proof that this is doing the best thing by consumers, that there is the best execution, and there's proof on paper to show that. The other really interesting thing
Pay for order.
Yeah, go ahead, Matt.
I was just going to say, well, pay for order flow is interesting, but I think shorting is the big deal here, Sonali, because it seems to me it's necessary to balance and discipline market players. On the other hand, if you're shorting the same stock over and over again, or even going naked, I mean, GameStop was shorted 160% of its shares out. That has to be a problem.
Yeah, and it's not surprising for anybody, even in the markets, to say, wait a minute, to put limits is not a bad idea, right? You don't want to see funds ever taking excessive risks to the point that it's going to impact securities or a market even more largely. But with that said, you know, I've got to pivot a little bit because one of the more interesting things that came out of yesterday had to do with not just retail trading, but the new entrants in financial markets. I think you can expect the CFPB, Rohit Chopra, and you can expect Gary Gensler at the SEC to take a hard look at the new firms that are entering financial markets, you know, think Walmart, right, and how they might be treating consumers.
Sonali, there's a story in the UK that people are really spending quite a lot of time on, which is Greensill and the supply chain finance, which we don't often hear about, and they may, you know, have to go into insolvency. Is it something that translates, you know, in the US?
Yeah, right. In some ways, Francine, it's the oldest story in the book, right? Illiquid assets, hard to value. Who knew that trade finance would be such a touchy industry, and that it would also rope in other players like Credit Suisse and GAM, right? But with that said, you know, we've seen issues like this in the past. Liquid assets have always been an issue in financial markets. It's been really hard for regulators to get a hold on them and any systemic effects behind them. With that said, trade finance in itself has not shown to be a big problem area. The seller, the buyer of the assets that we reported yesterday is Apollo's Athene, which is a big insurance company. Their role to take over some of these assets as a big insurance company, as an alternative financer, is a really interesting change as well.
Yeah, interesting to see the German regulator taking oversight of the Greensill Bank after the probe. Maybe that's one or two questions that Matt Miller can also put to Jens Weidmann, Bloomberg's Sonali Basak there. Now, coming up, we'll have plenty more, of course, on the markets, on some of these treasury moves. Kevin Foley, JP Morgan Global Head of Debt Capital Markets. That interview, 2:30 p.m. in New York, 7:30 p.m. in London. And this is Bloomberg.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Start your mornings with Bloomberg Surveillance. Tom Keene, Jonathan Ferro, and Lisa Abramowitz.
Extraordinary market day. This rally just keeps on going.
But there is a tipping point.
The business team you love to watch. Weekday mornings on Bloomberg Television.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance, the early edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kaylee Lyons in New York. Now let's get you straight to the first word news. And President Biden says that by the end of May, there will be enough vaccine doses for every American adult. He also wants teachers and childcare workers to have priority. The president called for states to give all of them at least one dose of the vaccine by the end of the month. It's part of the new drive to reopen schools. And it's President Biden's first major setback in filling his cabinet. Neera Tanden asked to withdraw from consideration to lead the Office of Management and Budget. Senators had objected to her partisanship, while Tanden led the Liberal Centre for American Progress for almost a decade. And here in the UK, the Chancellor of the Exchequer, Rishi Sunak, will extend furlough payments to workers through September. That will protect millions of people whose jobs have been suspended during the coronavirus pandemic. The British government will keep paying 80% of wages for those in the program through to June. Now, that allowance will decline over the following 3 months. And finally, the upcoming Tokyo Summer Olympics reportedly will bar overseas spectators. Well, according to the Mainichi newspaper, the decision takes into account public concern about the spread of the coronavirus. Organizers are still said to be considering how many Japanese spectators will be allowed. I mean, it's fascinating to hear, Matt, actually, how different economies are reopening. I know there's also movement on the Germany front with Angela Merkel trying to set out a plan a little bit like what we had in the UK.
Yeah, I wish there were a little bit more movement here. Although I can finally get my hair cut. The barber shops have opened here in Germany. And when we come back, we'll talk to Carsten Bresky about that. He is the ING Germany chief economist. This is Bloomberg.
What's the biggest mistake you made when you were a fresh MBA grad and looking for a job?
Make sure you try to do something that you're interested in and that you think you'll be good at. I just was on a path to law school, and I actually never asked myself why I wanted to go to law school. And I randomly went to an investment banking analyst recruiting event, and I figured out I had an aptitude for it. I was interested in the work. If you're not interested in it, and it's not something you're good at, the money will not justify it. I also think that there's nothing wrong with experimenting. Doing something that you always thought you might want to do, trying it for a couple of years, you can then go back down a traditional path if that's what you want to do. Try to remember what you want out of a job, where you want to live, what you want to get from it, from personal experiences, from development, from training, from fulfillment, from engagement in the community, and make sure you think about those things up front as you're recruiting and not try to evaluate it after you got there.
markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Well, this is Bloomberg Surveillance, the early edition, and here are some of our top stories. Budget day in the UK. Rishi Sunak extends the UK's furlough scheme to September, protecting millions whose jobs were suspended during lockdown. During today's budget, he's expected to lay out plans to hike corporate tax. Warren's wealth tax. The Massachusetts senator says her new act could raise $3 trillion over 10 years, as President Biden says the U.S. will have enough shots to vaccinate all adults by May. Well, more from our interview with Elizabeth Warren shortly. And Goldman's exodus. Bloomberg learns that chief lawyer Karen Seymour is set to depart the investment bank that takes a tally of 4 senior staffers exiting in as many days. Well, good morning from London, Berlin, and New York on this Wednesday, March the 3rd. I'm Francine Lacqua with Matt Miller and Kaylee Lyons. Matt, I'm so excited about your Jens Weidmann interview, the Bundesbank president. I know you'll ask him a thing or two about yields, inflation, and maybe Greensill.
Yeah, absolutely. Probably mostly about the fact that they didn't make any payouts for the first time since 1979. I thought that was pretty interesting after a balanced year in 2020. Also, he says basically they have to reopen the economy here in Germany. And while there are reports that Angela Merkel is willing to ease the lockdown, it's not really the case. She's extending the lockdown until March 28th for non-essential stores and my favorite bars like Brewdog, but she's allowing private meetings between personal households, something I suspect was really already going on during the lockdown anyway.
Yeah, so everybody knows that, nothing's open in the UK, Tom. What I love is that the Germans actually find hairdressers as
called me Tom.
Essential. Sorry, Matt, that non-essential basically here includes hairdressers, but in Germany they remained open.
Well, no, Germany just opened its hairdressers on Monday, which I know because my security guard got a really fancy haircut before coming to work this week. I don't need to go there. I do need to go to the gym. It's probably necessary, and they won't be open either until the end of the month, to my dismay.
All right, now away from gyms and hairdressers, onto the markets. Kaylee, what do you see?
Matt just really wants to get his workout on, Francine. Well, we did see a dip yesterday, and it is being bought this morning. Futures pointing to a higher open when U.S. cash open hits in about 4 hours' time. The outperformance looks like it's actually going to come from the small caps. Russell 2000 futures up 1.3% with 4 hours to go. Of course, we have been talking a lot about the bond market story. The ECB not panicking yet. The Fed doesn't seem to be either, and as a result, yields continuing to move higher, up 5 basis points, nearly 6 on the long end. The 30-year approaching 2.25% once again. Also watching Bitcoin up 9%. Whatever the SEC nominee Gary Gensler said, warning about cryptocurrency yesterday, investors seem to be shaking it off above 50,000 on Bitcoin once again. And that is lifting some stocks tied to Bitcoin in the pre-market, both Marathon, Patent, and Riot Blockchain up in the ballpark of 14% before the bell. And another stock I'm watching, talk about momentum, Rocket Companies. It started with good earnings last week. It is now looking like it will gain for a 4th day in a row. It has more than doubled over the last 4 days, up 71% yesterday alone, another 3% in the pre-market this morning. It seems Reddit traders are now focusing on this stock in particular, Matt.
Love the Rocket story for sure. That's a Detroit, Michigan story. I have corporate tax rates by country here. Now, Hillary hates these kind of charts. She says it looks like a bowl full of spaghetti, but you only need to pay attention to the lines on the top and the bottom. They've remained consistent. This chart goes back to 1998. The bottom is the UK, the least corporate tax rates, the lowest corporate tax rates, I should say, among the G7, still coming down to 19%. The top is consistently the Germans. Back in 1998, more than 55% under Helmut Kohl. Schroeder helped bring that down, but we're still at 30% plus here in Germany. So corporate tax rates are a real issue.
Yeah, it's a good chart, Tom. Tom, Matt, I can't get the words out. I keep on calling you Tom, and you are nothing like Joining us now
Never
from
change.
Frankfurt. I don't know whether Matt is flattered or actually really mad at me. Joining us from Frankfurt is Carsten Bredsky, chief economist at ING Germany. Carsten, maybe I could call you Tom as well. When you look at yields and actually what we've heard from the ECB, and it goes back to Matt's chart. When you look at, whether the ECB should actually intervene because of the market turmoil in yields that we saw the last 10 days, what can they do and what should they do?
Well, what they could do is become clearer in its communication. We have had so many ECB officials talking and speaking in recent days, but it is still unclear what the ECB's reaction function is. So will they look at nominal yields? Will they look at real yields? Will they rather take this, what they call the holistic approach and looking at financing conditions? So I think when we have the ECB meeting next week, they will have to clarify what their reaction function really is. What could they do is clearly they could have already front-loaded the asset purchases. So I think under Draghi, we would have seen an ECB silently front-loading, stepping up the daily purchases so that the market gossip has it that the ECB is in the market and willing to fight higher bond yields. But it looks as if the ECB for next week is still taking more of a benign stance, saying, okay, we had 20, 30 basis points higher yields. This is still no big drama, so we'll just stay at the sidelines and watch what is going to follow afterwards.
Carsten, if you go back to Matt's spaghetti chart, which I love for our radio listeners, it's basic. There are many lines, but it really tells you the story once you dig a little deeper. Carsten, when you look at that, are we creating a 2, 3, 4-speed Europe?
Well, when we look at the bottom line, which is the UK, no longer part of the EU, I think one issue here that will still be in any upcoming negotiations, whether the UK can become or could remain some kind of tax haven outside of the European Union. For the other countries, like Matt also mentioned, Germany being on top of the league in terms of corporate tax rates, I think this will be something for after the federal elections in September in Germany, because the government, any next government, will have to think about how can they form more incentives really to kickstart private investment in Germany in itself. And a lower corporate tax rate could be part of the solution to kickstart private investment.
Francine reminds me to welcome our London radio listeners. This program is simulcast in the financial capital of the world, the city of London. Carsten, I want to ask you a little inside baseball for viewers and listeners. I always email you to ask you for help before my big financial interviews. I've got the Bundesbank president, Jens Weidmann, coming up this afternoon. What do you think is the most important question I should put to him?
I think the most important question is how should the ECB react to this increase in bond yields? Because I had a quick peek at his speech that he just gave 30 minutes ago, was released 30 minutes ago, and there he was also pretty much benign regarding the increase in headline inflation. And you didn't hear him talking about any kind of normalization of monetary policy. I think this would be interesting to ask Jens Weidmann here. When will he see the case for some normalization of the ECB's monetary policy?
Is it worth it asking him about vaccines, Carsten? Because, being a resident of this country, it's pretty disappointing how slow the rollout has been compared to my family in the U.S., my friends in the U.K. Is that going to make a difference to the economy? Speaking of two-speed economies, next year or in 5 years' time?
Not next year, not in 5 years' time, but it definitely matters right now. Look at it. I think currently the queues in front of the hairdressers are longer than in front of the vaccination centers. Because the problem is not so much the supply, which is also messy, but it is really the rolling out. When you look at the latest numbers, I think Germany will get an additional 10 million vaccinations in the next 4 weeks, so adding up to a total of 20 doses being available. But when you look at the current rhythm, the current pace of daily vaccinations, we would end up at the end of March with something like 6 million unused doses. I guess you and I would probably somewhere try to stand in the back alley and see whether we can get a vaccination shot. But this is really extremely chaotic and messy. And if this continues, the recovery will not kickstart in the second quarter, but probably only in the third quarter.
Carsten, it's Kaylee in New York. You talk about this vaccine mismatch between Europe and the U.S. There also is a bit of a fiscal mismatch in that the Senate is expected to vote on a nearly $2 trillion package this week. And in Europe, the fiscal stimulus has been much smaller. So that's led to talk of overheating here in the U.S. Do you think there's any risk of overheating, of an overshoot in Europe at this point?
I wish there was, in all honesty. There definitely is not in Europe. We had a good fiscal response last year with stimulus, but this stimulus was mainly aimed at somehow keeping or preventing the economy from falling off the cliff. And then only a few countries like Germany added something on top, the fiscal stimulus package. I think when you look at the percent of GDP measures, it is only Germany, which at least before Biden was equal to the US. Now the US is actually going really into an acceleration mode, and the only thing that Europe will answer with is the European Recovery Fund, which will hopefully start to disburse money in the second half of this year, but in no way in the same magnitude as the US stimulus.
Yeah, Carsten, thank you so much. Of course, it makes a difference on whether you can afford it. Germany can afford it. The U.S., being the U.S., can also afford it. Carsten Brzezinski, ING chief economist. Now, coming up, the Chancellor of the Exchequer, Rishi Sunak, expected outside 11 Downing Streets in moments with that famous red briefcase. We, of course, discuss what to watch for in the UK budget next. This is Bloomberg.
Generation's biggest problem.
Climate change is happening.
And the world's most innovative solutions.
Transport, industry, buildings, electricity, all of those things.
Everything you need to know about our changing environment, the politics of global warming.
We can and we will deal with climate change.
In the fight against climate change, Bloomberg Green has you covered.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
Rishi Sunak will today pledge to use the UK government's fiscal firepower to protect jobs and livelihoods. Now, in his annual budget statement, he will also signal the need for future sacrifices to pay down the huge debts accumulated over the past year. You could see briefly, of course, the Chancellor with that red dispatch box. Now, let's get more with Bloomberg's Lizzie Burden. Lizzie, good morning. What can we actually expect from the Chancellor?
Well, Francine, the biggest challenge facing the Chancellor is the prospect of a jobless recovery, the idea that GDP could bounce back, but a high level of unemployment could linger. The Resolution Foundation says it's the lowest paid workers who are most likely to lose their jobs in the next 3 months. So that's why we're expecting the Chancellor to focus his budget on immediate support for jobs and incomes. We heard last night that he's going to extend the furlough scheme, but all of these support measures cost, and his next headache is the public finances. We know since the last budget there have been 13 major fiscal announcements. Nothing says it better than this next chart. It's pushed borrowing up to a peacetime high. So the question for today is whether Rishi Sunak is going to deal with that now or signal that he's going to deal with it later. We're expecting a gradual rise in corporation tax by the next election. But crucially, he's not going to want to abort the recovery. He says he has a sacred duty to fix the public finances, but every economist I've spoken to has said that a premature fiscal tightening will be bad for the recovery.
Lizzie, how difficult is it to actually predict GDP given the vaccine rollout, and what are we expecting from the OBR?
Yeah, so the Office for Budget Responsibility's forecasts will come out after the budget today. It'll be interesting to see what they expect for GDP. We know the Governor of the Bank of England, Andrew Bailey, has said he expects people to go for it when restrictions are lifted. But if tax rises are around the corner, will people who've been lucky enough to save get out there and spend those savings? We'll look at the OBR forecast, and it'll also be interesting to see if the success of the UK's vaccine rollout lifts the OBR's forecasts for the UK economy.
Is there going to be a push towards, green purchases in this budget, or any kind of ESG aspect to it?
In the longer term, potentially. We know that the government's 3 key targets are net zero, a global Britain, and levelling up the left behind parts of Britain. So there certainly could be a nod to green policies in the longer term. But as I say, it should be a focus on the immediate support for jobs and incomes.
Lizzie, can we talk about timing? You talk about how Rishi Sunak doesn't want to risk a weaker recovery in order to exercise kind of deficit restraint. So how quickly is he actually able to move on the raising revenue side of things?
Well, his hands are really tied because at the 2019 election, the Conservatives promised they wouldn't touch the 3 main revenue raisers, VAT, income tax and national insurance contributions, which kind of leaves him with corporation tax and other smaller levers to pull. But really, Rishi Sunak is an outlier globally to be even talking about fixing the public finances at this stage in the crisis. Look at the US, look at the EU, look at the IMF and the OECD. Everywhere else in the world is focused on pumping fiscal stimulus into their economies. So Rishi Sunak seems like the odd one out at this point.
Lizzie, thanks so much. Lizzie Burden there, one of our economic reporters. Now, later today, the UK Treasury Select Committee, also Chairman Mel Stride, he'll join us to talk about UK budget. That's at 11 a.m. in New York, 4 p.m. in London, and this is Bloomberg.
it's extremely exciting for the university, for being a historically black college and university. It's just exciting for our engineers to actually be allowed to work for a large firm such as Boeing with such technologies that we can see the outcome.
BSO Now is your online home for brand new Boston Symphony Orchestra and Boston Pops performances. Discover new releases each week that include behind-the-scenes storytelling with conductors including music director Andres Nelsons, guest composers and musicians, plus critically acclaimed archival concerts and more. Visit bso.org/now, where the music plays on. BSO season sponsored by Bank of America.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
I want to see a full investigation. I want to know...
Policy-wise, though? Is there...
Oh, but that is the policy-wise. I want to know who was behind the scenes on some of the critical decisions that were made, including the decisions about who could trade and who couldn't at critical moments. I also want to see an investigation into the contracts that folks signed in order to work through GameStop, which means they have forced arbitration clauses. So if they get cheated, they can't actually go to court. That's not right.
Merrick Garland, are you satisfied on his antitrust answers? Or you think he's going in the right direction on antitrust?
I think that Merrick Garland is definitely going in the right direction.
You mentioned 1 year later into the pandemic, we've become more reliant as a society on the internet, on big tech. You've raised a lot of concerns about big tech. Are you more concerned now about big tech than you were a year ago?
Yes.
How?
Because big tech is now more powerful than ever.
You think they are?
Yes. They are more powerful economically. We rely on them more economically. They are more powerful socially. We rely on them more for our connections. And they are more powerful politically. We need to break up big tech.
Senator Elizabeth Warren, there, Democrat from Massachusetts, speaking with Bloomberg's Kevin Cerulli on Capitol Hill. Now, Tom Keene, co-anchor of Bloomberg Surveillance, joins us now. Tom, I've been calling everyone Tom today, so I'm so glad that I'm actually speaking to you. What are you watching on U.S. Treasuries?
Well, you know, Kaylee, I mean, Francine, what am I watching? What am I watching on Treasury? I'm watching a move here. What we're looking at is 2's10 spread. There's a lot moving in the markets, and you go back to the fundamentals and the difference in yield between the 10-year and the 2-year U.S. full faith and credit. And the message here, Francine, is when it steepens rapidly. The second derivative, the acceleration, I took calculus with Kaylee Lines, it helped. The second derivative here, the calculus of when it goes, is profound in the 2's, 10s. And we're about halfway there to getting back to what is called a steep yield curve.
Yeah, I know you're also looking at some of the yields we're seeing in Europe after that ECB scoop by our Bloomberg News team in Frankfurt, saying actually they're a lot more relaxed about what we've seen in terms of market moves. Tom, I wonder whether you're focusing also on a lot of the bank stories with so many departures at Goldman Sachs.
Yeah, it's
I think
in the air.
Senior departures in as many days.
It's one part calendar date. It's March 3rd. You know, you get the February bonuses and bodies move around in March, and that's what's going on here. But you wonder if there's more going on here. I think there has to be a lot of good reporting on this. Francine, today we'll have Francisco Blanch in commodities. Really important to catch up with him with Bank of America. Jane Foley will join us with Rabobank in the trenches of foreign exchange. And maybe the interview of the day, does J.P. Morgan join those looking for 6, 7, or 8% real GDP in America? We'll speak to their wonderful Michael Ferroli.
All right, Tom, thank you so much. Tom Keene there, co-anchor of Bloomberg Surveillance Simulcast, a must-watch, and it starts in about 6 minutes from now. Now, we're watching a lot of things. Matt, what are you watching?
Well, one thing I'm watching is Danish CD rates, savings rates. Danish banks are pushing negative rates through from the ECB to consumers. And this is something that I thought initially, it's terrifying, right? I'm putting money in the bank and they're charging me to do that. But then I realized they're also giving consumers negative rates on mortgages. And of course, I have almost no cash in the bank because I spend it on motorcycles and my house. The mortgage payment is the big balloon. And if I'm getting paid to buy a house, I'm a happy camper. So when you're glad that you don't have negative rates, I think maybe be careful what you wish for, because if you did, maybe that would boost the housing market even more than it already is.
Matt, I heard actually of a big Swiss bank having to ask the regulator whether one of their big clients could literally put £1 million Swiss francs in cash because of negative rates impact. What are you watching, Kaylee?
I'm watching the eco data here in the U.S., Francine. We get ADP numbers at 8:15. Very important read ahead of the jobs report on Friday. And also ISM services, 10 o'clock Eastern time. We saw a blowout number when it came to the manufacturing number earlier this week. So interested to see if the read on the services sector reveals the same kind of acceleration. Remember, back in January, growth jumped to an almost 2-year high. So interested to see how that print shakes out at 10 a.m. Eastern, Fran.
Yeah, I'm of course looking at the UK budget. So we saw Rishi Sunak leave Downing Street onto the House of Parliament. So we were given a little bit of a preemptor of what he'll announce, which is this furlough program being extended to workers. I think about 1 million of them will have that support until September, and this is because of lockdown. What we're waiting to hear is, of course, a corporate tax rate. And I know, Matt, you did quite a lot of work on, I love that chart, the spaghetti chart that Hillary doesn't like. It kind of, goes back to the Brexit story and whether the UK, because of corporate taxation, could become a kind of Singapore-on-Thames type situation.
Yeah, well, hopefully, if you're a corporation, that'll happen, and you can put your office in London, live in an incredibly cultured city, and pay very little taxes. But of course, the truth is, in most jurisdictions, if you're a big enough company, you can figure out which politicians to pay to give you the kind of tax deductions that you actually want.
Yeah, I don't know if we're talking about bribery, but we do know that corporate taxation certainly
No, of course not. Campaign donations.
Because of COVID. Right. Coming up on Bloomberg Surveillance Early Edition tomorrow, we're excited to be talking to Martin Sorrell. I know he'll have a thing or two to say, not only about the advertising world, but certainly about the UK budget and what it means for mom and pop shops in the UK. This is Bloomberg.
Of the world's trade travels by sea. At any given time, around 5,000 ships are on the ocean carrying containers. Without them, the global economy would collapse.
Many of those containers pass through here, Singapore, the world's second largest port. The industry accounts for 7% of the country's GDP.
But the industry is under pressure. The uneven recovery from the pandemic is creating a shortage of containers where they're needed most and driving bottlenecks at major ports. It sent freight prices soaring.
Since the beginning of COVID-19, these are levels of shipments that we've never seen before.
Chinese New Year marks a seasonal time for freighters when rates are renegotiated for the next year. Companies must choose whether to swallow the financial hit or pass on the cost. It's a decision that could bring new headwinds for the global economic recovery.
you.